Hey all, welcome to ShareTreck. This is Raj here, friends. It's nice to see you all in the chat section. And yeah, I'm going to look at the user guide, David, for sure. I'll do it today. I was away for a few days. We had some big events, milestone birthday for my wife and a major anniversary for me and my wife. So a lot of family came over and we had a great time. So I'm back now, quickly looking at everything and trying to get back on the saddle. So here we have the main page that I use generally to talk about the markets. You can see that the fear and greed index is still stuck in extreme fear, but it's been improving. People are getting used to the new environment, it seems. So even though in the past we would have been extremely fearful, we are less extremely fearful now, if that makes any sense, because we have got dipped into this whole thing by Trump and his administration. So it takes a lot more to scare people nowadays. That's what I'm trying to say, basically. Now, more rich Americans are opening Swiss bank accounts fearing US risks because judges' pronouncements are not being adhered to, and what was considered to be established practice earlier has changed a lot. Like even if you look at the previous administration of Trump, they withdrew from the climate accord and they did a lot of unilateral moves. They're not part of the International Court of Justice and things like that. So people are now starting to get a bit worried that the established terms of engagement may probably be changing, and they don't know if it's changing for the better for them or for the worse. And to be safe, they are moving their money. Now, there are other things also going on. Trump renews call for Fed Chief Powell to lower interest rates. He should bring them down. He's saying that. And this kind of a move worries most of the investors, because the Fed should be independent and its focus is to be on employment and inflation, twin mandate. Now, if you give the guys who hold the fiscal policy the reins of the monetary policy, then there's no checks and balance. And without the judiciary being a check and balance for Trump, and without the Congress being a check and balance for Trump, it's making people worried for the worst. And that's the reason why we are seeing the 2-year to 10-year spread. The range is now 0.59. Above 0.50 is supposed to be dicey. Now we are going up, and just before that I had seen it at 0.6. So this is again a worrisome aspect. And if you look at the price of the dollar index is 98.13. It's sinking low. I'll show you the TradingView chart when we do the indices. You can see that it has broken past the last support that it had, and it's going down further. This happens when there is more dollars available than the demand for the dollar. This could indicate that some trades are switching over to non-dollar currencies. And that's again a vote of no confidence against US dollar as a reserve currency, in my opinion, of course. And if you look at the 10-year treasury, the 10-year treasury yields are going up. When the yields are going up, it means the market price for the treasury is going down. When does the price for something go down? It goes down when there is too many of that thing available and less people want it, and then the price goes down. So that's exactly what is happening to the 10-year treasury. So if you link the 10-year treasury along with this 2-year and 10-year spreads, we can see what exactly is happening out there, and it's not very comfortable. And that at the time that I took a snapshot of all the indices, the Dow futures was down 0.72%, S&P futures was down 0.85%, Nasdaq future was down 0.96%, and oil was down 2.41%. So that's where we had left everything. And I'm personally quite bearish looking at all of these stuff in front of me. Now, this week is going to be critical because we are having earnings, some major earnings coming up, the kinds that could move the markets. And this is a chart I picked up. I think this is from, I don't remember which website this is from, but it talks about price moves since reporting earnings. So most of the moves have been negative. And for us, if we look at the tariff regime and if we look at the unemployment status and generally what happens when tariffs are imposed, I'm thinking that many companies are going to revise downwards all their earnings projections, and that would mean downward revision of price to earnings ratios and PEG, and as a result of which we'll see share prices drop. The prices of shares that have already dropped significantly when they recompute the potential of the price based on the projected earnings declared by the companies during the earnings. I think some of those companies might do better because they have been beaten down. The others, where they feel that they are still overpriced, will go down further. So some estimates are that Tesla might have a plus or minus 10% swing based on what they report in the earnings. And I'm looking at the fact that BYD is doing really great, and it's a much better car. Its finishes and other things are way better than Tesla, and they are giving the free FSD as well. Plus, they are doing well outside of United States. So United States market has not yet been broken by them because they have got so much of hurdles against them. So the prospect of Tesla facing hurdles in China increases as this trade wars keeps on going up, possibilities keeps on going up, and there could be curbs on the factory itself for Tesla in China. So all those things, if I keep in mind, and the fact that they have got so much of negative push against their brand, I'm thinking that Tesla is likely to revise downwards unless they do some gimmicks like talking about a huge sale for their robotics or a robotaxi coming up in 4 or 5 cities. Unless they make those kind of pronouncements, I think that Tesla is likely to go down. But as a retail investor, I can't be absolutely sure. I wanted to show you this chart to say that most of the stocks after their earnings go down. So the risk of that happening to Google and Tesla is very real when they report their earnings later this week. I don't have the earnings calendar up here. Next time I'll get it up here. But there are a few companies out there which are going to be reporting earnings. Now I want to go and talk about our futures, S&P 500 futures. As you can see, we have been following a diagonal line of resistance, and we have been going downwards on it. And we broke our support of 5,314. I thought that this support was very critical because this marks the low point out here and the high point out here, and we had been going up since then. So we're entering a new zone. All the gains that we had since Trump's inauguration and all, it's all wiped out. And when we broke down below this horizontal line of support at 5,300 odd, I think we went into a new area which kind of becomes very difficult to break above unless we have something spectacular. So I'm looking at further decreases in the S&P 500 futures. And my next minor line of support for S&P 500 is at 5,106, and the other big support is going to be at 5,000.25. So I'm thinking that we are going to go all the way down to 5,000.25 in the next few trading sessions, unless something good comes up in the earnings. And if you look at the MACD is slightly bullish but tending towards the support line and signal line, and it's moving towards the bearish side. And momentum is also below average and falling, so it's not looking that great. If you look at Nasdaq, it's the same story. We are moving down in a bear channel. Again, this particular line of support at 18,571, in my opinion, was very critical. Now all the Trump bump, everything is gone, and I think the next stop for us logically is going to be 17,156.25, but we have two soft supports in between, one at 17,858.75 and another at 17,361.50. These are minor lines of support based on where we had bounced off from in the recent past, but I can't draw them through and through. So I think overall I'm bearish based on these factors. If you look at the MACD also, it's tending towards the signal line to cross over to the bearish side, and momentum is also below average and dropping. And pre-market we are down 1.57% right now. And look at the dollar index. As I mentioned, there was this support here earlier, and the support was at 99.243, and for 6 days or 5 days that support helped us, and I thought that it could potentially help us in the future as well, because it had performed the role of resistance in the past. So it's an important level of support which we have broken through. So I'm thinking that our next support probably is going to be somewhere out here. Let me mark this green. And it's going to be at $97.28. This again shows that people are moving away from the dollar assets. And you look at the 10-year yield, it's up 1.75% today. I'm just going to magnify this chart. I'm just recalibrating the chart so that you can see it much better. We have this diagonal line of resistance, which is going to provide resistance to us. And for today, this is the candle, and our resistance today is going to be 4.449. And since this is a dynamic line of resistance, for tomorrow, it's going to be 4.457. So as you see, with every passing day, the scope for us moving up is much higher, and MACD is absolutely bullish, moving away from the signal line, and momentum is also above average and picking up. So this kind of indicates that the yield are going to go up, and the price of the stock, price of the bond is going to keep on going down. This is not good for United States, which would like to refinance, and so they will be pushed to stay on the lower end of the bonds. And then we'll see the spread between lower ends and higher ends go to 0.6, 0.7, and so on and so forth. And Trump is demanding that the Fed reduce the rates, but the market is saying that we are looking at higher interest rates going forward. So what Trump is asking, in my opinion, is illogical. And if he goes ahead and sacks Fed Chief Powell and replaces him with somebody of his own, then probably there'll be an appeal to the court that he can't do that, and we'll get stuck at the Supreme Court, which should temporarily block it and create more uncertainties. So things are not looking that great, my friends, and that's the reason why I am pessimistic about the market. Let's go on and have a look at the indicators where we left them. S&P 500, if I zoom out, I forget about all this bear flag and everything. I consider this to be a bear channel. Then we are in a bearish pennant. Bearish pennants usually break downwards, and we have seen some signs here. Whatever we had as a support at 5,374, we said 5,300 was kind of a very important support. We should not fall below. So we fell below that. So I'm marking that as a resistance. We also fell below the 21-day. We have fallen below the 9-day exponential. That's also a very bad thing in my opinion. And now we have this diagonal line of support, which for today is going to be at 5,155.10. And pre-market, we have already seen that we are down. And when we closed last, we had the support of this line of support as 5,279.50 because we closed at 5,282. So I'm still going to assume that this is going to be a support, but we know for sure that when the market opens, this is going to become a resistance. So realistically for today, our support is going to be 5141.24, and our resistance is going to be 5281.53. And if we manage to break through that, then the 9-day exponential at 5,332.96 is going to be the next resistance. But I believe that today we are going down. I'm on to leverage funds which are negative, inverse relationship. So I'm looking at a really good day at the markets today for myself. Same thing with the NASDAQ as well. Let me draw a diagonal line of resistance to show you what I mean out here. So if I take this as the diagonal line of resistance, which goes through the highest points that we have, then we are still below the diagonal line of resistance, and we fell below this resistance which we had somewhere around 18,598.74, and then we also fell below this resistance of 18,512. So I've been away for a few days, so friends, I'm just doing a bit of housekeeping out here. And today we are out here. We closed at around 18,258.09, which is this candle, the bottom of this candle. So I think for us today, the resistance is very, very strong. It's at 18,496.55, which is the 9-day exponential, and it is overlapping with this horizontal line of resistance. So jointly, it's going to be very difficult to overcome that. So our support for today is going to be 17,405.92, and this is a minor line of support because this is where we bounced off in the past when we did that around 5th of August 2024. In fact, I have to pull this a little above to make it precise. So it's going to be at 17,438.87 for today. That's for NASDAQ. MACD is bullish but tending towards the signal line to cross over to the bear side. Momentum is below average. And we have seen in the futures that we are already down. QQQ market is open, it's down 1.45%. And again, here we are below our horizontal line of support of 450.32. So I'm going to mark that as a resistance, the first negative, and that's going to perform the role of a resistance today, along with the 9-day exponential, which is at 449.94. So jointly they're going to be a very strong resistance. So our first line of support today is going to be 434.18, and if we fall down below that, then I think our next support is going to be this horizontal line of support at 410.02, which marks the beginning of a huge area of support. I've just made the line thick so that you can see it here. So this happens to be at 409.63. So I'm hoping that that will provide a very strong support. And VIX has been jumping up. It's up 9.14% in the pre-market session. So VIX is saying that, yeah, things are going to be volatile today. And having said that, look at put call ratio, it's almost neutral, and gold is going up. And the reason why gold is still going up despite all of this diagonal line of support, diagonal line of resistance being way below, I think it is because the dollar is showing a lot of weakness. Bonds are also showing a lot of weakness, and therefore I think the money is probably going into gold. And at this stage I would also like to have a look at Bitcoin and see what's happening with Bitcoin. Has Bitcoin finally started to show that it's going to take up the slack? So it seems that Bitcoin is quite strong. It's at 2.22 and it's gone above this diagonal line of resistance. So I'm going to mark this diagonal line of resistance into a support. So personally, I'm thinking that Bitcoin is starting to show some spine. It's starting to delink from S&P 500 and the stock market. But when the market opens, if the S&P 500 continues to go down, I want to see that the Bitcoin remains up. And then I would believe that gold and Bitcoin are jointly attracting the money as safe havens. If that doesn't happen, so I'm going to be a little bit skeptical about Bitcoin. And my idea is that if Bitcoin goes further higher, I would take profits on IBIT and wait for it to come back down, because we have seen a whole lot of weakness for Bitcoin and a whole lot of correlation with S&P 500. So if I have a very bearish attitude for S&P 500, I need good enough proof that Bitcoin is delinked from S&P 500, and only then I would feel confident to keep my money in Bitcoin. I'm going to also look at alternates like XRP, because they are doing a whole lot of banking transactions in the parallel. So I'm thinking that XRP might have real world use case and it could be much more valuable. And yeah, so that's what I'm thinking. I'll start including XRP into our discussion going forward. Now, with that said, let's go on and have a look at AI, and let's look at NVIDIA. And friends, I'm going to come back into the comment section and respond to Hot Dog as well as David Best. Please bear with me. Let me finish off with this analysis, and I'll do it very quickly. NVIDIA is looking weak today. It's down 3.49% in pre-market session. It's at 97.95, so clearly it has fallen below 102. It's looking very damn cheap, but again, you have to look at how the sanctions are impacting, and we have to see what earnings projections NVIDIA is going to give by itself. But suffice to say, today our resistance is going to be 101.99 and our support is going to be 100.79, failing which we have another support at 99.29. So that's what we have here. MACD, momentum, both are looking weak. Meta is down 1.69% in pre-market trades, and as you can see here, we have a minor line of support which is at 500.40. Today we are at 493.02, so this minor line of support becomes a minor resistance, and our support at 483.76 is going to be the main support for today. So that's the range. MACD is bearish, momentum is also weak. Chart is not looking great for Meta. Google is down 1.32% in pre-market trades. We have earnings coming out on 24th April 2025, which is just 3 days away. That could make a difference for Google. And right now, our last support was at 152.42, where we ended previously. But today, in the pre-market trading, that has become a resistance. So for today, the resistance is going to be 152.52. And I'm going to draw this line further down. And I would say that for us today, our first support is going to be 151.04, and our second support is going to be 148.03 for Google. MACD is deteriorating. It's still bullish, but tending towards the signal line to cross over to the bearish side. Momentum is still weak and pointing downwards. So earnings this week are going to be a game changer for Google. It could move maybe 10% either way. Amazon is down 1.86% in pre-market trades. Our support previously was 171.22. It was a minor line of support that I had drawn out there. Now I'm going to remove this line of support. It's no longer valid. Our first resistance is going to be at 180.61 to 179.39. That's the area in which the 9-day exponential and the horizontal line of resistance are coinciding. So it's a very strong resistance out there. And our minor line of support here at 162.07 is going to perform the role of support. And we also have a huge support at 159.77. So those two are the points where Amazon can come and get some support. But I think Amazon has got some positive ratings and price upgrades, so that will also work on the market. Apple is down 2.55% in pre-market trades. Our support at 199.16 has now become a resistance because pre-market we are at 192.10. So I'm going to convert this into a resistance. We have the next support, which is at 192.19. And that is coming from a long time ago, and it has faced some resistance out here. It has been a support on the 10th of June. It's been a resistance many days, somewhere around 21st of May of last year, and so on. So I'm thinking that this support is going to do well today, 192.15. But unfortunately for us, when I look at this support and where we are today in the pre-market trade, we are very close to it at 192.17. So I'm thinking that we should either bounce off from here, or we would go down further to 182.95. That is the support that we are going to check in case we break down below this. Next, we are looking at Microsoft. Microsoft is down 1.10%, and it has not been this low for a very long time. Our supports have been broken down. I'm just going to update all the things that happened when I was away. And then we are looking at this support, which was at 367.79 when we left last. And that has now become a resistance. So I'm going to convert that into a line of resistance. It's going to perform the resistance today, 367.61. Pre-market, we are at 363.75, which is somewhere out here. So our first support is going to be this diagonal line of support, which is a dynamic support, and it's going to be at 355.38, and that's going to perform the role of support today for Microsoft. I don't expect Microsoft to fall below that today, even though MACD is bearish. The MACD is almost getting bearish and momentum is below average, but still I don't expect it to fall below that diagonal line of support. Tesla is down 4.04% in pre-market trades, and we have earnings on 22nd April, that is tomorrow, after hours. So this is a very tricky stock, and many of our supports earlier at 241 is going to be converted into a resistance, and our support at 233 is also going to be converted into a resistance. I'm converting a whole bunch of supports into resistance. The last support that I converted to resistance was 233.77. Pre-market, we are at 231.56. That is just below that. So our first resistance today is 233. Our support today is going to be 211.36. And I'm expecting that Tesla will test this support today as people get a bit panicky when we come closer to earnings. Then we have Oracle, which is down 1.45%, and it had a support at 128.01. It broke down below that, so it has now become a resistance. Our next support for today is going to be 125.86, and this diagonal line of support, I'm going to mark that as a resistance. So that done, I think the MACD and the momentum are also very weak. AMD is down 2.34%, and our support for today is 81.67. Our resistance for today is going to be 95.89. And we had this diagonal line of support which was with us for a while, which is again going to become a diagonal line of resistance. So the dynamic line of resistance today is going to be 90.05, along with 91.46 from the 9-day exponential moving average. Jointly, they are going to be a very strong resistance. So that's what I'm looking at today for the price action. Our first support is going to be 81.67 today, which is going to be a very strong support along with this diagonal line of support that we are seeing, which has been with us on a bad channel from the past. MACD is looking very weak indeed, so AMD doesn't look that strong. SMCI is down 2.81% in pre-market trades, and we have a news alert out here which says SMCI has been upgraded to a Zacks buy rank of 1. This is a positive sentiment out there, but I wouldn't buy anything because the overall market sentiment is bearish. So we had to wait and see what happens. We had a support at 31.04. and that support is gone because pre-market we are at 30.62. So I'm going to mark this as a resistance, and the resistance today at 31.04 is going to perform the role of resistance, and we have a support at 26.68. 26.68 is going to be our support for today. MACD, momentum, both are looking weak. Broadcom is also down 2.30%, and we had a minor line of support which could not hold it at 170, so that is becoming a resistance for today. 170.99 is our resistance for today, and our support for today is 159.69. and MACD and momentum are deteriorating, not too bad yet. Palantir is down 1.84% in pre-market trades. It has got a resistance at 101.46. It has got a whole lot of support starting from 90.72, which is the 9-day exponential moving average, 88.77, which is the 21-day exponential moving average, and 87.39, which happens to be the 50-day exponential moving average. All of them are going to give very strong support to Palantir. I'm expecting a short candle for Palantir today, and it taking a lot of support out there. MACD is still bullish. Momentum is still above average. I'm not seeing much of downsides for Palantir. It will go down, but the candle size is going to be much small, and it's definitely going to end above 83.22 today. SMH is the semiconductor ETF. It's down 2.40% in pre-market trades. It's going to get a support today at 185.57. On the upper side, it's going to get a resistance at 196.79. And I'm looking at FNGD, which is what I have loaded up with. It's up 5.12% in pre-market sessions. Today, I would start taking profits, 100 shares at a time, so that I can dollar cost profit on the way up. And I would start buying up FNGB, but I think many people are already loaded up. Many retailers, retail investors have already loaded up on FNGB. So I have to see how I enter that, but it's at a very low price at this point of time. I'm going to do a little bit more of analysis of this, and I'll share my thoughts with you in tomorrow's session. With that, I think I would like to go and look at Tempus AI. Where is my Tempus AI for hot dog? So hot dog Tempus AI resistance is going to be very strong at 42.89 and 42.36, which is the confluence of the 9-day and the 21-day exponential, and we are going to get very big support at 35.95. That's the range for Tempus AI. And MACD is looking bearish, but it's trying to improve. Momentum is below average, so the chart is not looking that great. So this is what I have to say for Tempus. And with that said, I think I would like to share another share with you which I'm working on. I'm familiar with Wipro Technologies. It's an Indian company. It does pretty well. It is a conglomerate, but predominantly technology. So I have bought some shares of Wipro, expecting it to bounce up from this line of support of 2.60. So I have loaded up with 1,000. I did dollar cost averaging, bought the 500 first and the next 500 later. So I'm expecting it to bounce back, and today pre-market it's up 0.74%. So I'm looking forward to take some profits out of that. I'm not going to sit on it for a long period of time. I'm just looking for this bounce back to pick it up, because I expect it to come down again due to the tariff war happening. So with that said, friends, I'm going to look at our chat section and start responding to everyone. So let me start from the beginning. Inf is saying, I'll be back in Canada land next week. Yes, welcome Inf, enjoy yourself. And then we have Hot Dog coming in and saying hello. And we have let me try this out and see if it works. I'm just going to try and put the chats out here and see if you guys can see the chat. So Hot Dog says hello. And then I think we have David Best with a whole lot of messages. Let me go through this. Japan 1.2 trillion US treasuries. Yes, I understand, David. They may sell, but the thing is, it's self-harm. If the value of the treasuries go down further, their reserves go down. So they have to do it very carefully. China to make next move, dump 200 plus billion in one go. Race to the bottom for the dollar, debase your currency, and your debt level looks less compared to other currency. Yeah, but the population is going to suffer a lot. The inflation and the social unrest that will happen will be phenomenal. So will a new dollar be worth 30 to 50% the old dollar? There's a good chance of those things happening, because the dollar, I mean, they have so much of debt, and their governance and rule of law, everything is looking very weak. So they are starting to look more like a emerging economy than a developed one. How will this play out during the revalue sterling back in 70s? Yeah, if history can be any guide, I would see that. And David Best, new to research that will happen to sterling back in 70s. Yeah, I'll check that out. Joe Williams, Hot Dog says, Illumina announced a partnership with Tempus AI. Wow, that's good news. I would like to check them out. I want them at 35. Okay, let's see. Let me see Tempus and see where Tempus, how it can reach 35. What is the prospect of it reaching 35? I think you would definitely have a chance to see it at 35. It's above the all-time low for sure. So you should be able to see it at around 35. You can dollar cost average your way to that in case it doesn't reach that. Yeah, so that's that. Yes, so guys, it was nice to see you all here. And thanks for joining up, and you always give me support and comfort. I thank you very much. It makes my live streams much better, and as you can notice, I'm feeling much more comfortable with my live streams. And I thank you for joining, and I'll catch up with you again in the next video. Bye for now.